Good afternoon. Thanks for joining us again. We have a presentation with Mako Mining CEO Akiba Leisman. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And there will be what I think is a significant Q&A section. So feel free to input your questions in the Q&A box, and we'll get to those partway through the session. I think Akiba's going to do a bit of an overview of the company as well as give an update on production. Hi, Akiba. Thanks for joining us again.
Hey, how's it going, Deb?
Good. Yeah, really good. Interested to hear more about the production numbers you just put out and maybe get an update on what's going on in Nicaragua. Yeah, why don't you take it away?
Sure. So for those that are unfamiliar with Mako, so first of all, I'm the CEO of Mako Mining. And the way that I like to describe it is that we're doing three things in northern Nicaragua. Firstly, we now have the highest grade open pit mine in the world commercialized. We declared commercial production July 1st. We made our first gold pour in May of last year. And then we just reported our second full quarter of operating production results, and Q4 financials will be out with our annual results sometime in April. That was really the first part of the Mako story. Secondly, there was a discovery that was made on the property years ago, an area called Las Conchitas. And then the objective over there was to use the cash flow from the mine to go and delineate a resource over at Las Conchitas, and then put that into a mineable form such that we can be mining Las Conchitas simultaneously with San Albino at some time at the end of this year. And as soon as we have enough runway on production from both mining sites, we can make a decision to go and expand production to 1,000 tons a day. So when we built the plants, the original San Albino plants, and I'll give everybody a little bit of a tour of this later in this presentation, we made all of the civil works and accommodations to it to be able to expand to 1,000 tons a day with maybe 4 or 5 months lead time and about $5 million of CapEx to go and expand it to 1,000 tons a day. So really the decision point on us being able to mine and process at 1,000 tons a day is really predicated on when we have enough comfort and visibility and being able to feed that mill at 1,000 tons a day. So our first quarter of production, where we produced just over 8,000 ounces of gold. There were still some teething issues with the plant that we needed to rectify. The Q4 results that we reported, we are now operating at nameplate capacity. Our nameplate was at 507 tons per day, but only operating at about 82% availability. We needed to get to a target 500 tons per day for us to be running at the level that the plant was designed. In December, in Q4, we were operating at that level. And in January, we're what I would consider to be at steady state production and beyond. So there was just over 10,000 ounces of gold recovered, just under 10,000 ounces of gold that were sold in Q4. And for our Q3 financial numbers, we reported cash costs of $660 an ounce. And I'll go over exactly what cash costs mean in a bit, and all-in sustaining costs of about $1,100 an ounce. And then for Q4, with a pretty dramatic step up in production that's continuing going forward, those numbers are going to be even lower. So we generated well in excess of $6 million of adjusted EBITDA in Q3, and then the EBITDA numbers for Q4 will be even larger. Now, all of the cash flow is being used to do a bunch of things. It's to fund the business objectives. I spoke about the first two. The third is also what I consider to be the most important part about Mako. Is that I do think that we're sitting on an orogenic gold mining camp here, which is a very disparate type of geology that you would find elsewhere in Central America. So not only do we have the capacity to obviously to sustain our operations, to expand our plant to 1,000 tons a day, to delineate a resource over at Las Conchitas, to acquire the land and surface rights in order to facilitate the mining of a much expanded footprint of mining. But we also do have enough excess cash flow to replenish our balance sheet. We repaid over $4.5 million of debt since the end of Q3. But finally, to go and invest in what we really think is the most important part about the story is that we do think that we're sitting on an orogenic gold mining camp with currently 188 square kilometers of ground under our belts with high-grade gold, multi-ounce gold, situated across our property, where we've been able to find it no less than 21 kilometers away from the plant at the tippy top of our land package. And frankly, the gold goes off our property in every direction. So we recently got drilling permits to go and drill the last two of our 4 concessions that we have over at San Albino. And we're right now in the process of getting our rig count up to where it needs to be, roughly 8 rigs by the middle of this year. We have rigs 5 and 6. I actually got the shipping certificate on them, so they're in country today. And then hopefully they'll be over at site over the course of the next few days, and we'll be at 6 operational by the very beginning of February, and then probably by late Q2, we'll be at 8 rigs. So to sustain not only everything that I mentioned, but what is likely going to be in excess of a $15 million exploration budget for the following 12 months from today. So even though the mine is initially scoped out to be relatively small, it's 500 tons per day, which in the context of global mining is a nothing burger. The reality is the grades that we're putting through this mill are so extraordinary that we do have the ability to generate cash that is dramatic, and the ability to fund all 3 of our objectives simultaneously, in addition to repaying all the debt, and then eventually to return capital to shareholders. So I'm going to be opening up our mine. So these are our security cameras. I see that our mining contractor is now back from lunch. He was taking a little break a few minutes ago. So we do have the trucks now moving right now. So a little bit about the layout over here. What you see in front of you is the west pit of San Albino. This is the area that contains, at least in terms of open pit potential, the San Albino vein. And then we have a little discontinuous vein above that called El Hobo as well. But 95% of the ore coming out of the west pit is from the San Albino vein. What makes up our currently 270,000 ounce resource that we put out in 2020, that we announced a positive reconciliation to, and I'll go over exactly the ramifications of that in a bit. But we put out that reconciliation press release a couple of weeks ago. The resource is behaving exactly how we expected it would be, because we do treat our technical data with the utmost level of seriousness, unlike I think some of our competitors in the industry. So what you see in front of you, it's kind of a unique pit. So first of all, just notice how clean everything is. The context of those benches are pretty extraordinary. So I couldn't be happier with how our mining contractor under our supervision has mined this thing. So a little bit about San Albino geology. We have the average width of the vein is maybe about 1.25 meters wide. But average kind of belies reality over here. We have complex geology. On occasion, that vein on a true width perspective can balloon out to 5, 6, even 7 meters in certain zones, generally related to vein duplication. So we have a vein that gets pushed up through these thrust faults and kind of bunch up on itself. So, but in areas we can be mining like 4, 5, 6, 7 meters simultaneously, and in certain parts of our ore body, that vein can pinch to tens of centimeters. So if you actually think about that from a perspective, so what you see in front of you, once the clouds and the shadows get out of the way, is that those benches that you see are 6 meters tall. So how do you actually mine a 1.25 meter vein that can occasionally shrink down to, let's say, 30, 40 centimeters, although sometimes it can be a multiple of 1.25 meters at 6 meter intervals? You'll dilute the hell out of this thing. Reality is we don't mine that way. So first of all, you can see below in some of that platform that you see down beneath, is that we're not mining this 6 meters at a time. We're mining these in half benches, 3 meters at a time. So that's kind of that platform over there, which is exposing probably the furthest into the hill part of the good stuff. So that material that you see on the backside of that platform is probably grading somewhere in the neighborhood of 25 grams undiluted, and probably just over a half ounce diluted material situated right in that contact point on that 3 meter bench. But even with that, we're not mining this at 3 meter tolerances. What we're doing is we're taking a channel sample every 4 meters, geologist supervision. We're going to be processing this in our production laboratory over here. So we'll know exactly what the grades are of this deposit. And then we'll also be able to analyze where the veins are, some very complicated morphology over here. We'll mark it off with a can of blue spray paint with our geologist control. And then you can see that excavator in kind of the left over there on one of the upper benches, is that geologist controlled excavator will be scooping off the waste unit on top, leaving that blue can of spray, that blue spray paint over there, such that we're just going to be mining selectively around the vein and a slight diluted area around the footwall and hanging wall of that vein. So we have been mining this since the early part of 2020. So this is now approaching 2 years of mining. And we've gotten our mining tolerances down to about 25 centimeters on either side of this thing. When I told people, and people that understood mining and the technicals behind our industry about what we intended to do, nobody believed that we'd be able to mine with those kind of tolerances, just because what we are doing certainly is not conventional, but I don't even think it's precedented in this industry in terms of the levels of controls that we have for our dilution. So now let's go back to our resource a bit, because it's topical, especially this week, where we've had a couple of high-profile blowups by people not being able to get their resource correctly. So how did we create this resource in the first place? So the predecessor company to Mako was a company. It's actually the same company. We changed the name after a transformational merger that happened in 2018. The predecessor, Golden Rain, put out a resource in 2012 that was slightly adjusted in 2015. It contained roughly 900,000 ounces of gold, mostly in the inferred categories, across all categories, a little bit of indicated as well, in everything that you see here. The west pit that you see in front of you, the central pit that you see, hopefully it's in the same direction that you're looking, but in the back left, I know my hands are pointing in the opposite direction. The southwest pit that you see to your back right, and then even a fourth pit that's within your screen to the northeast. So within those four zones over there, there was about 900,000 ounces of gold and just over 200,000 ounces of mineable gold within the open pits that's here. Because there is going to be a substantial underground resource when all is said and done. But when they put together that 900,000 ounce resource, what they did is a few pretty big no-nos. When you're dealing with high-grade, narrow vein systems like this. First of all, there was not nearly the level of control over the geological domains that resource was built around. And this is what I mean by this, is that our ore body is a high-grade vein that's grading, that generally is about 1.25 meters wide, as I mentioned before. And then there's a geochemically distinct hanging wall and footwall zone that on occasion can be grading multiple grams, but generally speaking, it's got background grade with respect to gold, let's say 1/4 gram on average. Now, the difference between that high-grade vein, which is probably grading on average about 17 grams, and the hanging wall and footwall is that in reality, the controls that you have on the geology are very, very predictable within the vein, and then not so predictable in the hanging wall and footwall. So the first thing that we did when we designed this resource was to get control of the geology. So we had to break this up into domains. We had a hanging wall vein domain. We had a vein domain. We had a footwall domain. We had a country rock domain associated with it, and modeled them independently. What Golden Rain was doing is that they were lumping everything together into a single geological domain, a much wider than 1.25 meter wide interval. But in doing that, all of the predictions, all of the data controls that they had on it was combining something that was very well understood, the vein, with something that was less well understood. So what wound up happening is that they were expanding the tonnage, the volumes that were coming into the resource. So vastly overstated the amount of tons that were coming into this mine. Secondly, that resource that Golden Rain put together was controlled by simply gold assays. You have a hole in the ground, you'll get a sample of gold over here, and that's going to define where this geologically distinct unit is going to be. The problem with that is that that is going to bias your results. You are forcing the modeling of the geology to go to those gold assays. So it winds up having an inherent bias in terms of the size of the resource. The first thing that we did was to control our zones and domains with something other than gold assays. We had a geochemically controlled geological model and geologists with their eyeballs that were looking at this thing in the core in that hanging wall with something other than gold. So we were generally controlling this with lead assays as well. And then with that, just because there was a super high correlation between gold and lead over here, we were able to remove those biases. Biases about the domains, biases about using gold assays to kind of define your resource and get it under control. Now, secondly, the geostatistics of our mine are unique. We talk a lot about nugget effects and things of the sort. So there's really two types of nugget effects. There's one where you can have a huge sample of gold assays and sometimes you can have like major outliers. So recently there was a mine that just got sold to an Aussie called Brucejack that's owned by Pretium. And then Pretium is a fantastic mine. Back in the day, we used to be a large shareholder of Pretium. But one thing about Pretium is that they have huge outliers to their model, and they actually ran into some trouble when they were trying to generate a resource the first time around. So they would have a domain of gold assays that were grading over here. Then they would have gold assays as high as 60, 70,000 grams a ton. And it was very difficult to get a good average of what those gold assays were. I won't go into some of their geostatistical modeling and why they ran into trouble about 10 years ago. But the mine is now doing great. So there's nothing inherently wrong with having a top-weighted type gold distribution. The thing about our mine is that you take a look at every single gold assay that we have, there are no outliers. This looks like a bog standard right out of a statistics textbook log normal distribution. And what that means is that we don't actually have to worry about where we place a cap on our resource in terms of our nugget effect, right? So we have a cap on the San Albino vein at 100 grams a ton. Frankly, we don't need to cap our deposit at all. I mean, that was used because I think there was probably about 3 out of 1,200 assays in our database that probably looked, maybe if you put your thumb in the air, slightly as outliers. So this is a very unique type deposit. And to put it into kind of geostatistical terms, the coefficient of variation of our geostatistics over here was about a 1.1. And that means the standard deviation of our gold assays was about 1.1 times the actual average. A company like Pretium had a coefficient of variation in excess of 20, right? So this is a much more controlled type model. I don't want to get too much into the weeds on some of these data points, but this is essential. This is everything. This is what you're invested in. It's the ability to model the resource and eventually to mine it. Now, the other aspect about having a nugget effect in one of these coarse gold deposits is about whether having a data sample here is going to influence data samples that are further away. The other attribute about our mine is that if you look down the vein domain, we have continuity within the high grade zones over here. Take a look at things like variograms and stuff like that in our model. It is very predictable. But on top of that, we put in very, very strict controls on how far we were taking high grade samples and how we were creating the resource. And you put all of that together, we have a resource that can be easily understood and easily modeled. And then finally, about our resource, we report always on a diluted basis. So I saw this company put out a 10-gram resource. 10-gram resource. Wow, 10-gram resource, millions of ounces of gold. That's going to be incredible. But it was undiluted. It was a narrow grade system, a narrow vein system over there. So when it goes to the mill, it's going to be 6-7 grams. So what's the point of putting out 10 grams where you're basically going to be telling your investors, 10 grams, it's a double-digit number over here. But guess what? When you're actually going to be processing it, it's only going to be 6. The only reason why a company would put out an undiluted number like that is to put in an investor mind that it is higher grade than what reality is going to be. We would never, ever do that with any of the data that we have over at Mako. So what we did is we reported a diluted grade. And what that means is we took our vein that was grading somewhere in the neighborhood of about 17 grams on average. Again, we separated these into geological domains. And then we were taking the hanging wall and footwall, and in our resource model, we were taking that on 50 centimeters on either side. And we were estimating grade throughout. And our block model was taken down to 1 meter by 1 meter by 2 meter units, which is about an eighth the size of what you would normally see for a high grade system like that. And when you actually diluted that 17 gram vein with a half meter of dilution on either side, we reported a 9.56 grams diluted resource. And guess what? When we take it to the mill, which I'll show you in a second over here, it was positively reconciling on grade by 10% and on ounces by 2%. Now, wow, 10%, that's great. But guess what? It's even better than that. And the reason why it's better than that, because that's exactly what we thought it would be, because we're not mining this with 50 centimeter tolerances. We're mining this with about 25 or 30 centimeters. And what that means is that we predicted every single ounce of gold about as close as you would ever expect in terms of what was actually going to be delivered to this mine. And the reason why we did this, it's not because like our competitors are less good. Everybody has the same technology. The difference between this company and then some of our competitors that blew up this week is that we gave our independent consultants, mine development associates who are extraordinary, we gave our team and geologists all the leeway in the world to say, do this right. We are not in the business of trying to get to a 1 million ounce resource over here because that's what the market wants to see. Get the data right. And when you get the data right, you can use it as an analog elsewhere in your property to complete stage 2 and stage 3 of our business objectives. So I was completely unsurprised with the fact that our resource positively reconciled by 10% on grade and 2% on ounces. And frankly, I'm not surprised that we've had resource blowups because the incentive in this industry is not to get it right. The incentive in this industry is to make things look bigger and better than what they are in reality. So let's go ahead and take a look at our plant. Probably change camera angles in a second. So what you see right now is our crusher, 2 stages, takes it down to about 3/8 of an inch. That's crushing on top of 2 separate reclaim tunnels. And those 2 reclaim tunnels will be fed into 2 separate 500 ton per day mills. We currently have, we name our mills. And the one on the left is Betty. The one on the right is Bertha. Betty has been operational for the last, 3.5 months. Bertha was what we started with, and now Bertha has gone through all the repairs. So we'll probably transition from the left to the right over the course of the next couple of weeks. We've been able to fill a single mill, somewhere in the neighborhood of about, I think our record day was putting in about 660, 670 dry tons. So that's included with the moisture factor up there. I don't think that would be steady state for the mills, but steady state for each one, inclusive of downtime and availability, will be well in excess of 500 tons per day if they're operated independently. So I'll change camera angles up here and we'll go over the plant in more detail. So the reclaim tunnels feed into the mills that you see kind of underneath that ceiling over there. And then from the mill, it goes into 2 circuits. We have a cyclone that separates them. One of them pulls into a Nelson concentrator, which is actually giving us a lot of difficulties this summer. They've now been resolved. That Nelson is now operational 80 to 90% of the time. So we're pulling a lot of gravity concentrates that will then go to our refinery that you see to the left. Undergoes an intense cyanide reactor. So we'll take out that gold from those gravity concentrates and then process it through a compartmentalized electrowinning unit to eventually pour a doré. And then the second stream, that the underflow from those cyclones will go to our carbon in leach processing plant. Just what you see right in front of you. So that first tank on the left is our thickener. We'll thicken it up. Then we'll take our ore, we'll put it in a series of 5 tanks. Then you have your ore going from left to right. And then you'll have, and there's cyanide solution in there and a bunch of water and some coconut shell carbon in slurry over here that's capturing the gold through a reduction process on the gold cyanide solution that you have in each one of those tanks. The ore is going from left to right, and then you have this activated carbon that's going from right to left. So once that carbon gets fully loaded, it will then report to a stripping circuit that you can see some steam coming out, so it's operational right now. And then that will get taken and stripped from our stripping vessel and then put into a separate electrowinning unit in our refinery. Those two things will then go and create a doré product for us to sell. So if you follow me on Twitter and you see our buttons and occasionally bars, that's all coming from the building over there. And then we also have a state-of-the-art processing center for our tailings. So we really do take our ESG responsibility seriously. We don't put any slides in our presentation about ESG because we actually do things on the ground that makes sense instead of trying to check the box for certain investors. But what you see on that right over there is a dry stack tailings storage, process, filter press initially, and then we'll stack our tailings dry on the back left. So we'll have a separate thickener unit over here. We will then put those tailings through a presser, and we'll take it down to about 16 or 17% moisture. Will turn into a little cake, and then all of those tailings stacked dry will then go into our tailings facility that you see to the right. Over here. State of the art, completely safe. This is top of the line in terms of environmental safety and security. Probably costs us 2.5 times per ton more than it would be if we were going to be running a conventional tailings management, a tailings dam for this. This is probably going to be costing us somewhere in the neighborhood of about $8.50, $9 a ton, as opposed to $4.50, maybe $5 a ton if you're going to be doing this through this scale, conventional tailings dam management. But the reason why we can do this is that not only do we take our environmental responsibilities very seriously, but also we have the grade to support this. When you're talking about $9 a ton relative to an 8 or 9 gram diluted ore body that's going through the mill, at the end of the day, it's not going to be a huge component of your all-in sustaining cost, even though on a tonnage unit, it's going to be quite a bit. If this was a 1 gram deposit, the economics would certainly not work, certainly not at 500 tons per day. Now, you really can't see Las Conchitas from the screen over here, but the other thing about our resource and why it was so small. So we took this down from 900,000 to 270. Obviously, there was a component to the modeling that we were doing over here. But the other thing is that if we did not have comfort on how the geological model was behaving, we gave it a goose egg. It's like we're not in the business of speculating on how this resource. I don't care if it was a measured, indicated, or inferred ounce. If that was going to be put into a technical document with my name on it, that ounce was coming out of the ground in some sort of definitive mine plan that we're going to be putting out and eventually getting into the mill and eventually extracting. So in doing this, and this is going to be topical because next week we're going to be putting our first exploration results out in a long time. And that had nothing to do with kind of like the slowdown of pace of our drilling. It was just these assay labs have been backed up to the wazoo for quite some time. The average hole is taking a little over 3 months for us to get back. But what you see in the back right of this screen over here is our southwest pit. So there's probably about 11 holes that hit something, hit a zone. And so, some of the grades have been fantastic. I mean, we have like one underground hit that's in excess of 200 grams. We have a few in excess of 60 and 70 grams in that area. When we were putting that resource together, we could not make heads or tails of how the geological model was behaving in this zone. So we gave it a goose egg. That being said, we've had a rig there that's going to be expanded. And you know what? It's complicated geology, but we found out that there is continuity there. We've been able to drill it. We've been able to hit the zone on continuous. We don't have all the data back, but we do have some. So that's the reason why we can put out at least a partial press release next week. And what they'll show is that those hits that were done, really going back to 2012, are real. They weren't there for no reason. So even though we had zero resource in the south, I shouldn't say zero, we had 450 ounces in a shallow pit over there. But the meat of the southwest zone over there was given a zero in that resource model. But the reality was, it wasn't zero. There were actually known hits. And then we finally cracked the code of what our geological model was. And all of that comes into play because the incentive structure of this company is not there to try to find the marginal investment dollar. We've been backed by a private equity fund out of the United States called Adelaide Capital, who's the majority shareholder. They've probably put in 70% of the capital, maybe a little bit more, maybe 75% of the capital that's taken to go and build what you see in front of your screen and then exploring from the outside. So if we removed ourselves from the financial infrastructure, removed ourselves by trying to get investors to kind of invest in the next big thing, we can actually just do and spend our time focused on getting the data right. And that's what it is. As soon as the incentives are released, you can focus on the business at hand. And that's what we did. So what we put out the last couple of weeks in terms of how this resource is behaving, what we've put out over the course of the last week or so in terms of how the mill and the mine has been behaving is not surprising to us at all. And frankly, some of the pitfalls and pratfalls that some of our competitors have fallen into is also not surprising at all, simply because this company has a much different incentive structure than the normal mining company.
Thanks for that overview, Akiba. So I have a couple questions from the audience. First one is, are you concerned about the continuous sell-off of shares and the poor share price performance as of late? I know we've gotten a couple questions about that, so maybe you can give us your thoughts.
When we were building the mine, there was a few series of capital raises. The first, we knew there was not going to be a big market for our shares. This was the summertime of 2019. The company was just created over at Mako. The previous CEO left to go to another company. And you know what? There was a lot of question marks about what we had from a technical perspective. The resource that was out was the 2015 one that I alluded to. I think everybody kind of recognized the preliminary economic assessment that our predecessors put out was not up to snuff, simply because the foundations of it was that very flawed geological model that they had back there. So we didn't really think that there was going to be a lot of demand for the shares. And we intentionally did not fully capitalize the mine. So we financed the first tranche through a rights offering. And through a rights offering that was backstopped by Wexford, said, great. So if investors who are in here want to participate, great. We're not going to try to convince any other investors to come in and let's finance that. Let's give ourselves some time as the data comes out, as we kind of understand the geology through our 36,000 meter infill program. We'll be able to further advance it and then finish the capital required for the mine. Then the next form of capital that came in was $15 million. It actually wasn't even enough to finish the mine, even if we wanted to do everything. It was actually intentionally designed to get to that first gold pour, and then we'll figure this out with an equity raise later on. We actually tried to go and see if any third-party debt lender wanted to come in on that time. And you know what? There was no demand. So you know what happened? Wexford came in for a $15.15 million loan in February 2020 that was designed just to get us to that first gold pour, but it wasn't going to be a sufficient amount of capital to fully commercialize everything. 3 weeks later, we got hit by the global pandemic. We actually had to slow things down quite a bit in terms of the construction of the mine at that point. And then it became clear that there was going to be a funding shortfall in the summer of 2020. So at that point in time, we were certainly more vocal about the asset. We very much wanted to bring in a broad base of investors over there. So we definitely ramped up our communication strategy over here. And every night I was laser focused on our stock price. It's like guys, we got to get this thing over 40. It was like couldn't sleep 3, 4 in the morning. I probably drank a little bit too much during those summer months as well. I was very concerned about our stock price. And you know what? There was a window of opportunity. We were able to do, for the first time in this company's history, a traditional bought deal over there. So we brought investors another $20 million equity raise over there. And then we had a few operational challenges when we first started up the mill in the beginning of 2021. So we took some third-party debt for a working capital facility at that point. But really the last equity raise was that summer month. And that was the last time that I was laser focused on, and I want to be very, very clear about what I'm saying over here. I was laser focused on the short-term performance of the stock, right? The long-term performance of the stock is the only thing that matters. Right? We have this three-stage business plan. We don't believe in technical successes that aren't good investments over time. That being said, we are a small company and we need to be successful and achieve our business plan. But the point that I'm trying to make, I couldn't care less where our stock is on any particular day, because I don't need money. I don't need to raise capital. I don't. This everything that you see on your screen over there is able to fund everything that we need to do, not only to repay our debt on the balance sheet for the debt that I mentioned before, not everything over here to go and get the Las Conchitas resource into development and eventually expand our plant, everything that we need to do on the exploration side, which is going to be in excess of $15 million for the next 12 months. It doesn't matter. We're in a liquid stock. If it concerns you on any given day, you shouldn't be in something this illiquid. Go and invest in a barrack where you can go and get out in the next hour if it concerns you. But that being said, the long-term performance of our stock is really everything that's in this business. But we gave ourselves a 5-year business plan to achieve our 3 objectives. And I will be very concerned about where our stock price is leading up to that 5th year anniversary. But right now, whatever, it doesn't really bother me one way or the other.
And a second part to that question, which is, what initiatives are you doing currently, or do you plan to do this year to promote the stock?
Sure. So there's, I guess, 2 pathways for that. There's the retail side and the institutional side, for whatever that particularly means. On the retail side, I would say prior to Mako, and certainly prior to the pandemic, I would spend a lot of time traveling to city and city trying to do the plate licking circuit. I viewed that as relative to cost, not only monetary, but more importantly, time. It was just not effective. So in terms of retail communications, I don't think you're going to be finding a CEO that's more responsive, maybe not to your levels of liking, maybe a little bit too responsive, but in terms of social media access, and certainly if you have any question, I make it a point to make sure everything and anybody is answered. On the institutional side, it's a little bit of a tricky package, because there's a lot of moving parts with this company. This is an industry that's set up to invest in a certain model, especially in North America, which is what I would consider to be, and there's nothing inherently wrong with this. I don't mean this in a derisory way, but the setup in North America is to invest in new discoveries where geologists can clearly see the path of day, to get it kind of in a kind of a conventional asset of what people would like, generally speaking, larger mining companies to acquire them, or to have something that kind of fits a check the box strategy for mine development. For a lot of reasons, this company does not fall into those scenarios for a few reasons. One, it's geologically. I think for the type of our deposit, the fact that it's shallow lying, the fact that it's very narrow in terms of the vein, a single drill hole is not going to be finding 1 million ounces of gold. It's going to be very incremental in terms of what our drill program is going to be looking like. And we do have a disciplined approach to exploration. So even though our land package has all the hallmarks of being an orogenic gold mining camp, and I've said this before publicly, I don't think there's any doubt in my mind that over time, over generations, you're going to be finding 5, 10 plus million ounces of gold on our 188 square kilometer land package. It's going to be very, very difficult for you to have a single piece of geological information that's going to be the aha moment for some of those geologist type investors. Secondly, for an asset to be acquired by a major, I use this somewhat humorous kind of anecdote about there was only one mid-tier mining company that took a serious look at us. This was back in 2019. I'm about to make fun of them, but let me first say they should be given a lot of credit for being the only one that took a serious look at us, right? So first of all, I'm really appreciative that they signed a CA and took a look at our data. They said, I see your geological model, I see what you're doing. If you're going to be mining this our way, you're going to dilute the hell of this, and this is going to be a 3-gram deposit. And they could not get their heads around the fact that we were going to be doing things differently than what a normal mining company would take a look at. And it's certainly their prerogative to invest in assets that fit into their model because that's what they're comfortable with. We don't act that way. We do things that make sense for the business at hand. And the business at hand is to mine this as selectively as we're doing. So for this to be acquired, we were never kind of in that range. So to attract what I would consider to be the conventional institutional investor, especially in the North American market, is always going to be a challenge for us. That being said, there's 2 components to this company. This is being managed by professional, not only geologist and engineer. I happen to be an engineer by training, but my background over here is in finance, like the ability to finance operations, and really for the last 5 or 6 years to manage them without all this baggage of coming through managing these mining assets that have really only had sporadic success as operating entities, and trying to apply like some level of discipline and a business related approach to getting things up and running. Now, that could potentially be attractive to a different type of investor, but it's generally not going to be the normal course investor that you would see in this market. So with that, there's a limit to the audience over there. Now, we do have 2 banks that provide informal coverage on us, Cormark and Infor Financial. They've been very helpful to us in a whole host of respects. I think, but even with them, you're starting to take a look at how they view things from a conventional standpoint. We are an outlier in terms of their normal client base. So really, we've been on our own, right? So, but that's okay because we have the capital to advance our projects. Got to know where we need to be, and we know what the end game is going to be. Is that eventually, with enough data that's going to be coming from production, enough data that's going to be coming from the exploration, people are going to see exactly what we're trying to do, and it's going to click. So in time, the institutions are going to come. We would love to have more of them in our share register, but it's always going to be a tough sell for a company like Mako.
On the flip side, your ability to mine in a different way, does that open the door to M&A opportunities that maybe others are overlooking?
Sure.
In terms of on the acquisition side, as Mako is the acquirer.
Yeah, we've had, I would say, one company that felt right to me, right? So there's two ways of looking at M&A. There's are you going to buy something that puts you to enough scale that either you're going to be attractive to a larger company or attractive to the same conventional audience that we were talking about before. We've looked at that, but I would say those companies with conventional assets are falling into the same trap that the investors are, because their incentive in their universe is to kind of appeal to the same dollars in this industry. So it's always been very difficult to find a conventional asset like that. We actually had reasonable discussions with a company that also has kind of like an unconventional approach, and kind of like both assets together made sense. And like I'm still kind of weirded out that we weren't able to actually advance discussions beyond that, because I do think people kind of get stuck in the rut. People understand mining is very, very hard, and like people put a lot of ego and pride into these things. It's very difficult to give up. So we run into traps like that. We're not even, the history of the company, Devin, and most of the shareholders on this. When Marlin and Golden Rain merged, Marlin had a lot of things that it needed. One of the things that it didn't need was me to retain my job as interim CEO of Marlin. So that was the other side. The other side is that I need to be CEO of this company. And obviously, that's going to cost you a year there, a year. at the end of the day, I didn't care. I didn't care. Like, if that was not the necessity. What was necessary for me is that as a fiduciary to Marlin, I knew that we were going to be infinitely better off if we merged with Golden Ring. So happy to do the transaction on the terms. And I thought the negotiations with them were easy once they got into the right frame of mind. They were exceedingly difficult for the 4.5 years prior to that. But in the 48 hours after they had their epiphany, it was actually very easy to deal with them. And I'm really happy that everybody came to their senses. But one of the easiest things for me to do was to give up my job to facilitate the merger. Now, that being said, I didn't go away. I was my same pleasant self at the board level. So the CEO decided to leave to another company after only about 3 months. But at the end of the day, this is not. We try to divorce our investment decisions from our egos, and unfortunately, most of the mining industry does not think that way. The egos do get in the way. I would say, like, tuck-in acquisitions, we're always kind of on the lookout, but it's the same thing. Everybody is kind of like caught in this situation where it's like, well, what exactly is Mako? And we try to answer that question. We try to answer that question really going back since 2019. We've executed and we've done everything that we said we did, but hopefully something will click, because at the end of the day, like 3, 4, 5 years from now, I want Mako to be a much bigger company than it is today.
Could you give us a brief overview of the exploration drilling and what sort of ETA we're looking at for the assay results?
Some of the assay results have started to come back. We'll do this area by area, so I'll go over. There's 4 rigs now, and then hopefully that wasn't a forged certificate for those drill rigs 5 or 6. But so assuming that's not the case, then they'll be at site over the course of the next few days. I'll be drilling with 5 or 6, and then by the summertime, 7 and 8 will come to site. So of the 4 that's there right now, right.
Yeah, well, there's that actually looks like a production rig over there. I think we've moved
both our rigs. So yesterday we actually had 4 rigs in 4 separate places. So we had 1 rig to the northeast, which is right at the bottom middle of your screen over there, and that was looking at direct extensions outside the pit of San Albino on a small basis. Now we actually have a lot of room to move from the northeast part of our pit to hopefully nobody's getting too nauseous over here, but that river that you see over there, the Rio Hicaro. So we can't mine and can't design a pit within 200 meters of the river. But 2 things happened over the course of the few things happened over the course of the last couple of years. So first of all, we acquired the concession that was contiguous to our property to the north from a company called Condor Resources. And so that gave us some space over there. And then kind of quietly, we've been acquiring all the surface rights in the area. We finally have kind of like a contiguous surface rights package directly to the northeast of our pit. The only thing that constrains the resource to the northeast is our data. So there is kind of like a creek that probably displaced things to the north, but we've seen samples at surface and trenches over there. The gold continues within this 800-meter space between where we have right over here on the west pit and then what's directly to the northeast of the mine. So we had 1 rig that's there. Those results, I think we might have like 1 or 2 holes that will come out in next week's press release. But there's going to be a bunch of them that will come back over the course of the next couple of weeks. What we think is going to be a much more material thing is that now that we acquire the surface rights, is to go on the other side of that creek that you see kind of going left to right over here. And we can find it on the other side of the property. There's room for another San Albino over there. So that's 1. And all pretty much within, on the north side, it's kind of, we would have to get an exploitation permit over there. We have the ability to drill, and even to a little bit to the northeast, we'll have the ability to mine. What I'm like in this screen that you see in front of you, what I'm excited about is what you see to the southwest. Now, the southwest is off to the back right over there. Like I said, there was, when we put this together, there were hits. There were like 11, 12 holes in the zone that hit multi-ounce gold over here. We just couldn't string it together. And it's complicated geology. You can see kind of like these hills and displacements that are coming into our property over here. And you can be drilling something. You can have a trench open it up. You can drill over here and hit like 107 grams gold, and then you can't find it again. And because you have these situations where the morphology of the vein can change, the dip can go from the northwest to the southwest on occasion over here. It is complicated to string these together. So we have skilled geologists, and it takes time. And I think we finally cracked the code of the Southwest Pit. So we'll put out the results next week. I think we've gotten one out of 12 important holes back. But there's enough right now to kind of piece together kind of like what the real model is on the Southwest Pit. And we have like another mine there. And that's fully permitted. Like the Southwest Pit was part of the original 2015 PA and part of the 2017 permit. We have a fourth rig all the way on the other side of that hill that's doing some condemnation work and also some early stage exploration results over at Las Conchitas. We're going to be placing our larger waste dump. Our waste dump that we have right now over at San Albino can last probably till the beginning of next year. So we need to expand that quite greatly, not only to finish off San Albino, but also to deal with the Las Conchitas waste material as well. So we're doing some condemnation holes, but also it serves as exploration results. And you know what? Like we're finding gold even through our condemnation program. So part of the challenge is finding space to put waste. We have a rig that is focused on the extensions of Las Conchitas. So that's one where Las Conchitas is complicated geology. So this is going to take time. We have a single rig that's not there to do resource delineation drilling. It's there to try to find additional zones. We have 7 targets over Las Conchitas. Each one of them has, at the very least, trenching, but also, for the most part, drilling information that's intersected ounce material, like all over the place over here. And then we've got the stuff to the regional stuff to the north, not only of at Puerto Rios. We've extended the strike of the San Albino deposit, at least the strike potential over here from the 240 meters of strike that you see in the West Pit. We've traced this with mineralization across the lineaments, another 9 kilometers on the other side of the river, just on San Albino. And then directly to the northeast, we have Segoviana, both Puerto Rios and Segoviana. We're now fully permitted to drill on. We've now made our a major surface rights acquisition, so we'll have the ability to go and really start targeting from a drilling program as soon as we get that 7th and 8th rig over there. But in terms of what Las Segoviana sees, I think the potential is bigger than we have over at San Albino and Las Conchitas combined. In terms of what I've seen from that property. We're finding samples in excess of 10 ounces of gold over at Segoviana. I mean, it's mind-boggling the targets that we have over here. Like one of my so someone asked about the stock. I'm not worried about the stock. What I am worried about is just the ability to manage what is a program where there's a lot of things that need to be covered to do it correctly. So what keeps me up at night is kind of scheduling and making sure we have the resources, not only financial, but human resources to accommodate the hundreds and hundreds, if not thousands of targets that we have on our property.
Okay, thanks for that thorough answer, Akiba. I had another question, which was on the all-in sustaining cash costs. Where is the question? I guess the question is, what was your longer term projections once all kinks are worked out? Where do you think you fall?
So let's kind of discuss what all-in sustaining cost actually means, right? So there's cash costs, and this is kind of how we kind of view our operations. There's 3 things that we care greatly about. There's mining, right? So what you see in front of you over here, and just a little bit about mining. We've been, say, averaging maybe just under 300,000 tons a month of material. That's waste and ore coming out of the mine. And for a couple of reasons, what you see right in front of you, that's our first phase of mining. So the strip ratio is a little bit lower than what the life of mine projection is, specifically on the west pit. We'll talk about the central pit in a second. You can see some of the trucks on the back, and that's the Aris and Naranjo vein up to the top left. So phase one, it's like a 16 to 1 strip ratio mine, 300,000 tons a month, pretty good, and let's say pretty decent rough numbers. It's about $3 a ton to get all of our waste and ore in front of the crusher. So it's about $900,000. That's going to be increasing a little bit because we need to add a partial second shift in order to get up to maybe not quite 400,000 tons a day, but maybe like high 300,000 tons a day. So that's going to probably go up to about 1.1 million per month to mine to deal with our second phase. So you can see that platform up on the top right. That's our second phase of mining. And eventually there's going to be a third phase that will open up that's going to require more and more tons. As the pit gets deeper, it's going to require more tons to be moved, and that'll be supplemented by the stuff that you see all the way in the top left from our central pit, such that our average strip ratio is going to be maybe a few units higher than where it's been before. That's going to be an average from a low strip ratio mine to the top left and a higher strip ratio mine to what we're mining over at the west pit. So going forward, it's going to be about $1.1 million a month on mining costs. Then you have your processing costs over here. Now, we've tried to, this is probably an elevated cost mine for everything that we do, right? So we have our tailings, which cost more than a conventional approach because we take our environmental safety and security pretty seriously. We're also small on scale, right? So at 500 tons per day on a unit basis, it's going to be higher cost than Oyu Tolgoi in Mongolia that's doing, I don't know what they're doing now, 300,000 tons a day, thereabouts. It's just a different scale unit in terms of what the mills are capable of doing. So our processing costs generally run us about $50 to $55 a ton, kind of all in for everything that you see in front of you. And at steady state, we should be at 15,500 a month. We've been slightly below that for Q3 and Q4, but we'll get to about 15.5 over time. So that'll add another, what is that? It's another 800 grand. So now you're kind of pushing maybe 1.9 million. And then there's the Nicaraguan related overhead to support everything. We've got our contractors outside of our mine contract, and then we've got our 220 employees directly over in Nicaragua, and that will add somewhere in the neighborhood of about $400,000 a month. So our costs will be going up from maybe the 1.9, 1.85, 1.9 that it was in Q3. It would be a little over 2 million a month for Q4, and then it'll probably be in the lower half of twos for our cash costs, albeit with slightly higher production results. So our cash costs net, when you actually think about it, aren't really changing all that much from Q3. The actual dollar amount is a little bit higher, but so is our gold production. So it balances out. So it'll probably be there. From an all-in, so then we have our total cash costs, which is going to be adding taxes to the Nicaraguan government. It's going to be these weird things with inventory management and things like that. So that gets added too. And then our all-in sustaining costs, which is going to be our reclamation liabilities, our corporate overhead. I had a discussion on Twitter with somebody today. There's some companies that don't put CEO salaries in all-in sustaining costs. I should say you're required to. You can do whatever you want. But in terms of what an effective usage of AISC is you gotta allocate your cash corporate overhead to that as well. So that's adding another few $100,000 a month as well across everything that we have in our Canadian office, our few U.S. offices, our Mexican office, as well as some corporate responsibility in Nicaragua, as well as reclamation liabilities and things like that. So Q3 was 1,100. That's going to be elevated when you factor in everything. Q4 will be substantially lower than that, but this is going to be when you factor into everything, inclusive of of how we account for everything. This will be one of the lowest cost mines on the planet on a dollar ounce basis if everything was accounted for the same way that we are. I encourage people to look at our profitability. It's like, it's not, everybody is like focused on AISC. It's like, any company could do whatever they want with those numbers. I could make my AIC look at like $700 an ounce if I made certain decisions on how to compute them, because you have a lot of flexibility to do that. Look at the earnings. Like there's something called accounting. Like there's something called GAAP, right? Look at earnings. First quarter we were profitable on a net income basis. Second quarter we'll be profitable next year because we take these things seriously. We're not here to try to make this thing look like it's something that it's not. We're a very profitable mine, and we have no issues of being fully transparent with people on how those costs are allocated.
How confident are you that you can get to 1,000 tons per day and maintain that production rate?
Right. I mean, that's the second caveat. That's the big one, to be able to sustain at 1,000 tons a day. I mean, you saw the numbers that were coming out from the mine. We mine slightly ahead of our mill, so I'm very comfortable being able to get 600 tons of ore from what you see in front of you over here, and then adding that partial second shift, something over there. In order for us to get to 1,000 tons a day, we need to be mining Las Conchitas simultaneously to this, and then obviously expanding the Southwest Pit, and then Las Conchitas was something else. So the ability to actually see in front of you enough mining faces where you are not going to be out milling your mine. We're clearly not there yet. I think having those two rigs, actually we were only operating with 3 rigs up until I think August of last year. That was way behind schedule with some of the logistical challenges to get rigs over at site. The ability to get rigs, delineate that mineable resource over at Las Conchitas certainly was pushed back, I think, from our schedule from last year. That being said, we're going to start mining over at Las Conchitas by the end of this year. So we'll be in a position to start our permit application for exploitation probably over the course of the next 6 weeks. There'll probably be some back and forth, some community consultations that will come with that. And then I expect by November, December to be able to mine Las Conchitas. And then really the second that we have clear visibility of moving forward, it really with 5 months notice, with very limited capital, we'll be able to expand that thing to 1,000 tons a day. Where I see it right now, I think we've probably pushed things back about 3 months from where we were on schedule from last year. So I think this is an early 2023 decision, but all of that is going to be predicated on finding mineable resources over at Las Conchitas. That being said, there are certain things that we can do incrementally to the plant. So like the 1,000 tons a day requires like another tailings press over there. We can't. That's kind of our bottleneck. That being said, there are things that we can kind of even further debottleneck our plant, such that we could probably operate this thing at well in excess of 600. So it's not completely binary. There are these choices where we can increase production at the mill level by 20% rather than 100%. But we need about a 5-month lead period to make that decision, and it's all going to be predicated on having sustainable ore coming from somewhere that is not on the screen right now.
And then talking about the upgrading to 1,000 ton per day, what would be the estimated CapEx on that?
Fixed infrastructure, so everything that you see here, it's less than $5 million to do it. So you'll have 5 additional tanks. You see the foundations that are poured from them. So that's another circuit over there. That crusher that you see in the background can easily handle 1,000 tons a day. We already have 2 500 ton per day mills that are both operational right now. The back end over here, you can see we have space to have another train of thickener tanks, but we'll have over in that very last building over there, you'll be able to put another tailings press. So just to make sure that's not the full bottleneck of the plant. So that's by far the most expensive component out of that $5 million. That filter press alone is about $2.3 million. You'll have to have a couple of extra generators associated with it, but it's not going to cost more than $5 million to double this.
Okay. And then beyond that, would you ever look at increasing production beyond 1,000 tons per day? And what's the scalability there?
we're pretty tight. like that is in fact, like, so we built that little platform over there. So if you were looking at this thing in 2018, like, it was a head scratcher where you're going to be putting any plant. Zero chance that that's going to be expanded beyond 2x here. That being said, we have concessions and starting to have a hell of a lot more surface rights now under our possession. Although those surface rights are really on prospective areas of ground, we'll need to have places to put infrastructure. We can build a plant somewhere else 5-10 years down the road, certainly. But over here, what you see over there, like, you can't put anything anywhere. So 1,000 tons a day is the max of what you can actually do this for the infrastructure that we have and what we've designed for.
And then switching gears, I had a question about what's going on in Nicaragua. Maybe you could give an update there. And are you concerned that the Biden administration might sanction Nicaragua and its leaders? Is it possible that the Biden administration might force U.S. shareholders to sell their shares in Mako or Sailfish?
To the first part, the Biden administration has sanctioned Nicaraguan government officials, right? So so they've put them on various degrees of sanctions. Practically, it hasn't really affected our business. I think one of the mines minister was actually placed under sanction. And 2 days after that, we actually got our permit for I guess it was La Segoviana drilling. So from a practical perspective, it didn't really affect anything. Even if you read the sanctions, it didn't look like there was any desire to have like broader economic sanctions, and certainly not against U.S. citizens holding shares. So I'm not a politician, and I'm certainly not in communications with either the Nicaraguan government or the U.S. government in terms of what they're planning on doing. But I would be very surprised if there's going to be sanctions against U.S. citizens involved in passive equity holdings for companies that happen to operate in Nicaragua, even though they're headquartered in Canada. You got to make do. There are certainly risks in operating in Nicaragua. I mean, don't get me wrong. It is a different ball of wax than having a mine in the United States, Canada, or Australia. Certainly from a geopolitical perspective. That being said, there are advantages. I mean, think about where we are. Is that we got permits to build this thing in 2017. It's 2022 now. We have a functional mine. We built this in the middle of the pandemic. We got 2 pretty large exploration permits that were delivered to us one technically took a year and a half to get, but partially that was just because we needed to wait for some the title registration to transfer. But purely like administrative discussions on those permits, it didn't really take longer than 4 or 5 months to get permits on those things. If that was in the United States, Canada, even to a certain extent Australia, that would take years in terms of what we're now able to do. So there are pluses and minuses. I don't want to make it seem like it's all rosy in Nicaragua, but there are definitely advantages to be operating in this particular, I don't want to say like a country like that, specifically Nicaragua. They've made a decision to have gold mining be a strategic industry in the country. So they're supportive of it. I think the discussions that we've had with the government have been very, very fruitful. We have a good working relationship with everybody. I think every decision they've made, it's been clear that it's been good for the stakeholders, not just Mako, but the people that live in El Jicaro and Mura and broader Nueva Segovia. It's been huge for their local economy. The local population is universally supportive of the mine. It's a pleasure to operate in this area. This is a historically important mine. This was the birthplace of the original Nicaraguan Revolution, 1926 and 1927. The namesake of the Sandinistas actually comes from our former let's call him general manager of the 1926 operations over here. So it's a very prideful moment that this got up and running in Nicaragua, really the birthplace of Nicaraguan true independence.
Can you provide an update on Sailfish and what's going on with the swordfish spinout?
Sure. So we put out a press release about the spin out. It's like October of last year. And that was predicated on us raising US $5 million that was going to be coming from somebody without Wexford on there, right? So it was important for proof of valuation, just because there's a lot of related party transactions over there. The Commonwealth asset coming in, the Gavilanes from Sailfish, which was also a Wexford majority-owned vehicle. And then we needed to have $5 million to maintain original listing standards over here. I think towards the end of November, early December, the book was okay. It wasn't great. I'm not going to be going public with a company with an okay book. So we asked our lawyers to put pencils down in the middle of December. And then as soon as we actually get a robust book, we're back online. So I think technically the LOI has expired, but everybody wants to do the deal. So we'll get that renewed on as soon as we've got visibility on that $5 million minimum capital raise. What I can say is that there has been movement on that. So I don't know if it was just the last couple of days in the silver market, but before then, I think there's been renewed interest, and also there are more what I would consider to be strategic discussions going on that will help facilitate a capital raise of a minimum of that in order to facilitate the going public transaction. So it's not dead, but it's certainly delayed from where we are simply because it was predicated to have a robust equity book. And actually, one of the downsides of Mako, Sailfish, and everything, there is a natural hesitancy for investors who have been brought up investing in let's call it the conventional approach to mining, to investing alongside us, right? For whatever reason. Part of that is against my warm and sunny personality. Part of that is just because nobody wants to be second fiddle to a majority shareholder, right? And honestly, when I was on the buy side, I think I had a similar bias. Like, nobody wants to help out their competitor. Like, everybody wants to see them fail. Everybody wants, like, all this schadenfreude. It's like, oh my God, those nutty private equity boys from Wexford Capital, they try to mine. I went to a third-rate mining school, and I worked in this industry for 20 years. I didn't have any success, mind you, but I know how to do things better than these New York hedge fund guys. So part of that is coming into play over there as well. And the end result is that we don't play that game. So we wish everybody success in the world. And if people want to help us, then great. And if people don't, you know what, we can move forward with our business independently as well.
Can you provide an update on the NCIB and if and when you intend to use it?
Sure. So we haven't bought a share back yet on the NCIB. Irrespective of what's happened with the stock price the last couple of days, so it's been weak. If you asked me this question 48 hours ago, I don't think the drawdown that Mako had was all that different, certainly on a liquidity adjusted basis, to the general market. I think that's probably changed a little bit in the last couple of days. So the priority is always going to be on debt repayment. We repaid $4.5 million of principal since the end of Q3. We should probably pay another one toward another principal payment towards the end of this month. We closed out our last January gold sale, so the priority is to get that debt repaid. But if we're trading substantially weaker than what I would consider to be our universe of comps, then of course it can go live. And really, the last 48 hours. Certainly today, maybe yesterday was the first time that the antennae went up. That being said, I've told everybody for the last 7 weeks that we're actually sitting on data that we can't release because these godforsaken assay labs can't get back our final drilling certificates. So we're information restricted until those press releases and the information that we have in our possession right now is put out there. So we're a little bit hamstrung from a data information perspective, but I think we'll be pretty clear when that first press release goes out.
Can you also provide a timeline on the debt repayment schedule and when you expect to be debt free?
We had 15 point. Let's go a little history of the debt, because there's a lot of moving parts over there, really to maximize flexibility for the obviously principally to actually get the money to build this thing that you see in front of your screen. But then once we actually had that capital to provide maximum flexibility to do whatever we needed to do. So it's $15.15 million of principal that went to Wexford February 2020. We needed to have a working capital facility, so we took it from a third-party lender that gave $6.4 million. That was very fortunate that we were able to get that. So not only were we able to continue our exploration, we had our teething issues in April and May. We very, very, very close came to running out of money. So we borrowed $6.4 million. We needed $6.3999 million of that to make sure that we got to cash flow positive. Then it became clear that we wanted to maximize flexibility. So we took an $8 million loan from Sailfish Royalties. That's an affiliated company. 100% of that $8 million went to principal repayment. So the 6.4 was repaid with that 8, and then 1.6 of the principal, that 15.15 was repaid to Wexford. So that 15.15 went down to roughly 13.5. Then you had the $8 million Sailfish loan. In Q3, we repaid $2 million of principal. That took it down to 11.5. We've been paying roughly $350,000 a month of Sailfish. So there's been a few quarters of that. And then subsequent to quarter end, we had another $2.5 million of principal that went to Wexford. So I think it's now at in the high 8s of principal. And then our first priority is to make sure that we finance our business objectives, and then after 1, 2, and 3 our second or fourth, depending on how you count, highest priority is to make sure that that principal gets repaid as quickly as possible, and then the fifth priority is the shareholder returns. Somebody I read that somebody online that said somehow that means that we're giving shareholders like a bottom of the line priority. It's like, no, we're investing in our business objectives for shareholders over here, right? So we're doing steps 1, 2, and 3 to get this business out so that we're actually going to be creating value and turning Mako into something special at the end of the day. This is for shareholders. Likewise, to reduce leverage over at the balance sheet is also gives us strength, flexibility, and the ability to be able to run our operations a lot more effectively. So even the debt repayment at the end of the day is for shareholders, at least at the cost of the debt that exists right now, which is relatively high cost debt. We had if a bank wanted to lend to us with a nice 7-8% facility, of course we would take that, and then debt repayment would be less of a priority. But the high cost of debt on both the Sailfish and the Wexford side means that repaying that principal is good for shareholders at the end of the day. And then to the extent that our shares are selling off more than our direct competitors in the market and the broader market and the broader gold equity market in general, of course we'll be tactical on the share buyback. And then once we're cleared from the debt, then pedal to the metal on that.
I had a follow-on question, which was asking about your dividend policy.
Right. So this is, and by the way, this is like, I get into discussions with Wexford about this too. It's like Wexford wants us to pay a dividend. So I got into a heated argument with Chuck on that a few weeks ago as well. The Sailfish was easy to underpin a dividend, right? So there's no capital requirements. The company is what it is, right? So it's got like huge long dated royalty. It's got very limited corporate G&A, and then it's got its stream and gold loan from San Albino. So to run that company, huge visibility. The CFO Brian from Sailfish can write a financial model on Sailfish in 20 minutes while he's out at Chipotle. So it's a very easy business to go and model and run, and to have predictability in being able to finance what is an industry leading dividend in for this year. And now, even with Sailfish's share price appreciation, it's still over 4% from a yield perspective. Mako's not in the same situation, right? So Mako, we're still even like finalizing our exploration budget. I mentioned earlier, it's likely going to be over $15 million, but we're like going over the targets over here. It's like, there's just so much for us to do right now, and getting the visibility. And what is this company going to be? Is it going to be 500 tons a day, and it's going to be 1,000 tons a day in late 2022, early 2023? When is it going to? What is the cash flows going to look like? When all of these things are going to kind of underpin when you can actually have a sustainable dividend. A second, we do that and actually can see, you know what, this is the business going forward. We have enough like runway where we're now at steady state, not only on the operations at the expanded 1,000 tons a day. Our exploration program is giving us pretty consistent upside results where we can start underwriting a continuing business going forward. Of course, that's like when you want to pay a dividend. But right now, it's very difficult for us to say. It's like, all right, this is a dividend that we're going to be committing to, not just for a quarter. Like technically, a dividend you're only committing to when you pay it quarterly. But in reality, it's like you never want to cut your dividends. You're really underwriting something that you're making a multi-year commitment for, and Mako needs to get to a position where it can be underwriting multi-year commitments, and it's not there yet.
Okay, well, that's it for questions. Maybe we can end with some catalysts that investors can expect over the coming weeks and months.
Sure. So I think it's like a big thing that we're going to get started with the exploration results. Like we get all ridiculous criticisms from various sources about what we're trying to do. I think like a very valid criticism is like so much of our company's value is related to our exploration results. And you haven't put out a press release for like 4.5, 5 months now on this. It's kind of crazy. It's true, right? So like part of it is us ramping up on exploration. Part of it is the logistical challenges of actually getting drills turning. But also part of this is like the assay labs were crazy last year, and it's still not really resolved. So it's like we're going to be putting it out. I guess the good side to that is that we have this like huge backlog. Is that it's going to be pretty continuous going forward. On like every few weeks, we'll pretty consistently going forward, just because there's so much backlog in data. That's a big thing. So for people that kind of got sold their stock because they're like waiting for exploration, that's kind of like, that makes sense to me, as opposed to some of the other criticisms that we could potentially get. The other thing is like, so we're going to have, I called our Q3 numbers kind of like operating at B- in terms of where we are, but even that, it was like a positive net income. We've generated well over $6 million of adjusted EBITDA. Q4, I would consider us to be A- B+. So a lot of those bottlenecks have been, actually all the bottlenecks have been removed, but it was towards the end of the quarter, kind of like in late November where that happened. And so with that, the numbers are going to start showing up in January. We're running at full nameplate. So we're there at capacity right now. So this is really going to be the first time that somebody actually has the ability to see what this relatively small scale mine can do from a profitability perspective. It kind of plays with people's heads. Like, wow, you're doing 500 tons per day. That's nothing. Like how am I going to invest in something so small? There's no scale. But when you actually start breaking it down into what the profitability of these tons are going into that mill that you see over there, it's astounding what this company is able to do in phase one on the 500 tons per day scenario, let alone what can happen over at 1,000 tons a day when we actually have visibility on the mill feed. And then the game changer is really the regional stuff. So our objective this year is to make a discovery, at least one and potentially on two very distinct parts of our concessions. It's going to happen. Like everything that we can see geologically, what we can see with some of the very friendly small scale miners over there in terms of what they're mining, it is extraordinary what's on our land package. So we have every intent of making discovery this calendar year on an area that's never been drilled before. Sounds exciting. Well, I think we've run out of questions and we're well over the hours. So unless we've missed anything, maybe we can leave it there. Was there anything else you wanted to discuss today, Akiba? No, that's Mako in a nutshell. It feels like this is the least stressed I've ever been in the mining industry, because the mine is actually now performing, and now And now the fun stuff comes where you actually start to reinvest in the property and find out what's really there.
Great. Well, thanks for taking the time. Thank you, everyone, for participating. As always, if I missed a question or you have additional questions, feel free to reach out and I'll get those answered for you. And everyone, have a good afternoon.